Just switched screens. Hopefully you can hear me loud and clear. I have remembered to switch my microphone on, which sometimes I don't do. So Anna can hear me, so hopefully you all can too. Right, let's just move the chat box out of the way. I've really just focusing on the dollar this morning, and I would urge you the chart that Anna brought up of the dollar index. It's at a fascinating point, and as always, the Wyckoff laws apply, whether you're looking at spot charts, futures charts, whatever they may be. Cause and effect, the longer that congestion continues, then the greater should be the momentum to the trend once it starts to develop. So plus you've got all the support, the resistance and support levels, all platforms in place there. It's at an interesting juncture. And of course, as Anna said, with the laundry list of sentiment, then it's going to be an interesting next few weeks, certainly in terms of trading the majors. What I've started with here is I've actually got the currency futures up, which may be unfamiliar to you. This is the 6A, this is the Aussie dollar. This is the 6B, this is cable. This is the 6C. The reason that this is a dollar CAD, but it's actually CAD dollar, it's the inverse. So when we're seeing over here, you can see we've got Canadian dollar weakness. We've got the strong selling of the Canadian dollar. That is why that particular chart is upside down, if you will. In spot, it's dollar CAD. In futures, it's CAD dollar. And it's actually quite a nice way to trade if you've got a position like this, or you've got an opportunity like this. I prefer trading short all the time, as much as I can. And therefore, when you get opportunities like this, I'll look to flip over onto futures and trade to the short side. And that's why the trend monitor is red on all. Down at the bottom here, we've got the 6Es. That's euro dollar. That's conventional. This one is dollar yen. This one is yen dollar. Again, it's the inverse because dollar yen in spot, yen dollar in futures. So you're seeing. The reason I've done this is really just to show you that what you're seeing here is straight dollar strength or straight dollar weakness, but it also gives you a different perspective. This was the there we go. This was the snap at the 8 o'clock. As always, you expect to see trap moves. We certainly got one. Anna was talking. You know, that draws traders in. Inevitably, it was quite a quick move. Reversed back very rapidly. Lots of volume, as you would expect, because this is 8 o'clock London time. So we've got the big step up in terms of participation, and a snap move to the downside. Really strong move. Yes, we've got the volatility triggered. What are we expecting to see now? We expect to see one of two things, either congestion, which is what we've got right now, or we've got a reversal. At the moment, we're seeing congestion, and if the bearish trend is going to continue and you want to jump in again, maybe you've closed out. And I always advise you, if you're in a position and you see the volatility triggered in your particular time window, close out. Take the money off the table. You've lost nothing. If it reverses, you're happy. If it congests, you haven't got to sit through the congestion, the pain of congestion, worrying about whether it's going to continue or whether it's going to reverse. Just close out. Or if you're scaling out, take a chunk of your positions off the table. If you've got 4 or 5 contracts running, take 3 or 4 off, leave 1 to run, so at least you've got a position in the market still, or close. If you're only trading 1, perhaps 1 or 2, then just close them out, get out of the market, bank your profit, and then sit and wait. Because if the market then breaks below this region on down to, let's say, 2760 and below, then you can always jump back in. All of you lost is a handful of pips in here, and you've also lost the pain of sitting through this congestion phase, which is what we're seeing right now. If you're in a loss position, if you've got a position in the market and it moves you into loss, then that's a tougher decision you have to make. You've got to decide whether it's going to continue, whether you're going to get out of jail. You know, there's lots of different decisions to make in that scenario. But if you've got a position that's in profit and the move is in your direction, close out, take it off the table, and just sit and wait for that to break away from the trigger. Starting to break away here. This is the Aussie dollar. Let's say this is the dollar CAD, or the CAD dollar rather. We had some nice 2-bar reversals, bearish engulfing there, bearish engulfing on that one. Nice 2-bar reversal at the top here. So if you maybe missed the entry point, then you've got a nice 2-bar reversal there on a 5-minute chart if you inverted that one or took that over to a 10-minute chart rather. So that's what we're seeing in terms of the futures. If I just go on to the spot markets with the same scenario, there we go, currency majors matrix. And what the futures also give you is a slightly different view on volume. It's not going to be hugely different because volume, the volume on the both spot and futures lines up. Just start to see this breakaway now starting to develop. This is cable. We've got dollar CAD here, so we've also got the inverse here. This is Aussie dollar, Euro dollar, dollar Swiss, and New Zealand dollar. And it's just a really nice way of seeing, if you're trading a major, it gives you not only the perspective on the major you're trading, if you're in cable, for example, this also gives you a different perspective in terms of the other currency pairs in that particular matrix of currencies. And you also get a very different perspective. For example, you know, you move down onto the New Zealand dollar. This was the open of the market at 8 o'clock London, and then you get this very strong signal on the New Zealand dollar here of weakness. So it just gives you a different perspective all the time. You know, you don't necessarily get that. For example, the same chart over here on Euro dollar, you know, not so clear, because what we've got here, we've got a long-legged doji candle. You know, that is merely signaling indecision. It's not signaling trend one way or the other particularly. It's just simply stating the fact that you've got falling volume here into a rising market. So we know it's weak, but that doesn't really give you that much of a clear signal. It gives you a signal of indecision. Move up onto cable. We've got a nice signal there, pretty much the same as on New Zealand dollar. Lots of volume, weakness there, down we go. And now we're continuing lower. And this is what I meant about taking your profit off the table. You can now jump back in if you wish. The trend monitor is still supportive, and that's the beauty of the trend monitor. It hasn't flickered, it hasn't changed sentiment. It's purely telling you again that on this 5-minute time horizon, you know, this particular market is weak. There's been not a flicker of a change in terms of its color. It's just helping to keep you in, and that's what this business is all about. It's helping you to maximize where you possibly can to keep in the trend once it's underway, because the hardest thing to do in trading is to stay in a trend. And the reason is because in the mathematics of trading, you are going to take a lot of small losses. You have to, it's part and parcel of trading. But they are counterbalanced by a fewer number, but a much larger return in terms of a return on profit. And that will outweigh all your small losses. And that's why it's so difficult to move forward in your trading account, because it's holding a position once you're in profit, not losing out when the market goes into congestion. Yes, we've got volatility here, so it's a slightly different scenario, but you get these all the time. And it's a question of holding through that. Exactly the same you can see down on the Euro dollar here. Let's pop that one up. Same sort of thing. Heavy selling coming in on this one. We've got lots of volume going into these two. Excuse me, I'm just going to switch off for a moment. Got lots of volume coming into these two. Sorry, I had a frog in my throat. You've got lots of volume coming into these two, but the market's not really going anywhere. So yes, it's not looking terribly strong. You know, it's looking for continuation. Again, the trend monitor helping to keep you in. Now we're starting to come down to a low volume region on the volume point of control histogram. So, you know, that should help. We'd have this in different time frames. Obviously, be looking at either side of it. We'd have maybe a 2 or 3 minute on one side, maybe a 10, 15 minute on the other. That would give us a different scenario. But certainly in terms of 5-minute low volume here, we're moving into this low volume area. That's why the market is moving through there quickly, because there's very little in the way of volume on the histogram of the VPOC to actually cause the market to pause. And then it's a question of really just picking, you know, what is the best trade right now? What is driving momentum? Let's go and have a look at the currency array, which will give you a view on momentum. There we go. This is on 3-minute, 5-minute, 10-minute, over onto the 15-minute. Just get that out of the way. You can see here the dollar CAD, it's up at the top. You know, it's really, really moving nicely. If we isolate out on dollar to see where we are, you know, the laggard here is Euro dollar. But then if you go back and look at, let's have a quick look at the previous workspace. I'll do it quickly. Where we're at, there we go. Okay. You know, why is the Euro dollar really, this is on 5, I think. Yep, it's on 5. Why is the Euro dollar really not following suit in a, you know, such a strong way? And the reason is because the Euro is really just sort of flip-flopping around. Everything else is moving. You know, there is momentum there. There's momentum in the move. And it's a case, as with the currency strength indicator, where were we? Back to the currency array. There we are. With the currency strength indicator, not only does it tell you, where to get in terms of, am I looking at overbought, oversold here, the steepness of the lines, what is moving the most strongly in terms of a currency, but also it'll tell you which pairs are moving in the same direction, or which currencies are moving in the same direction rather, and therefore, this is not worth looking at right now because there's no momentum. So you're constantly looking for momentum. We're seeing it here in the dollar CAD at the top, you've got it in cable at the bottom, pretty much spoiled for choice at the moment, and spoiled for choice across the time horizons. This is on 5, this is on 10, let's isolate them all now, and this is on 15. So it really gives you an instant view of the visuals, and what you'll also see when you're watching the array is you'll see these sweeping up this way, you'll see these sweeping down. The steeper the line, the stronger is the trend in that particular currency pair right now. And in addition to that, what the currency array also does, and it also does this on the currency matrix, it gives you a view on whether the sentiment for that particular pair that you're trading is aligned with the universal sentiment across the market. In other words, is the market per se in total buying or selling dollar right now? Because if the market is a river, then the sentiment of that river is universal if they are all flowing in the same direction, and certainly they are at the moment. So basically at the moment, the market is buying the dollar per se across these faster time frames. You can see them tracking up, you can see them tracking down, as Anna said, so should you right now. That's what it's telling you. What this indicator is also giving you is a heads up, as you can see in this ranking ladder down here, when these currency pairs are potentially approaching the little OS, in other words, oversold, or the overbought up at the top. When they're overbought or oversold, they will go to these bright colors, the bright red, this will change to bright blue. When they're approaching those regions, then they will be with the brackets around in a darker color, so it's approaching oversold and approaching overbought up here. So it's a multifaceted indicator to give you a lot of information. Let's just head back onto the chart. Actually, let's go to the multiple CSIs. Where are we? Let's have a look. Currency strength multiples, there we go. See where we are. And this is what we're seeing right now. This is on 1 minute, 5 minute, 10 minute, and 15 minute. So we've got the strong selling of the British pound here. We've got selling of the pound, strong selling of the pound over on 15. We have this little blip here. And this is the other facet to all trading, not just forex trading, but it's the understanding that there are wheels within wheels in terms of time frame. It's like the Russian dolls. If you've seen a Russian doll, you have a tiny little Russian doll in the middle, and it goes all the way up until the largest one on the outside. And it's very similar in terms of understanding the way markets behave, because on the very fastest time, you could have a complete cycle here of the dollar being bought and then sold and being bought again on the 1 minute time frame. But in terms of what you'll see over here on the 15 minute, it may just be a little blip. It could be something like this. It could be a little blip like that. And that's the core of choosing your time frame, selecting your time frame, deciding what it is you're trying to do, and trying to stick to it, because it's so easy. We've all done it. Anna and I have done it many times. You get into a trade on a 5 minute time frame or a 2 minute time frame, doesn't quite go the way you're expecting. So you expand your vision out. You move over onto the 5 minute, the 10 minute, the 15 minute. Looking for confirmation of what you believe. Confirmation bias, basically. We explained it in the psychology program, but it is confirmation bias. You're constantly looking. If you've made a decision about something, what you look for in the world is confirmation. It's a bit like, let's say you've decided to buy a car. And a particular color of car, you then look for confirmation that other people have done the same thing. You're driving around and you look for that confirmation that yes, you've made a good decision because all these other people have made the same decision, therefore it must be a good decision. That's the way your mind works. You can't avoid it. There's nothing you can do about it. It's DNA. It's in our DNA. So it's very easy to fall into that trap. And as I say, we've all done it. Anna and I have done it multiple times. So you have to try and be disciplined. What am I trying to do with this trade? Am I restricting myself to a 1, 2, 3 minute combination? You get in, get out. I'm going to take a handful of pips and get out again. Or am I looking at this from a 10, 15 minute perspective where all this minor oscillation down this level, you've got the Aussie being bought now again, it's got down into oversold, the pound looks as though it may kick up, the dollar looks as though it can kick over, yen's rolling over as well, these two are rising nicely. From a scalping trading perspective on 1 minute, a 15-second or 30-second trader may well be scalping this already. They may well be in there taking some pips to the upside on yen, Aussie, pound, whatever. Over on this time frame, that particular trader who's trading 15-minute, 30-minute, probably not bothered. All they're looking at is actually a secondary. What's happening here is a possible secondary reversal against what is their primary trend over here, which is still bearish. And again, it's another facet, and it's also a facet where VPA is really powerful, because what it tells you is whether that is indeed a secondary reversal or whether in fact it is a full reversal from a primary trend to a primary trend. If it's primary to primary, you will see that confirmed by the volume. If it's primary into secondary, you can expect it to revert back into primary again. And that is it's an application of VPA which we detail to great extent in the forex trading program, because it's a key aspect. It's another reason that a lot of traders get thrown out of trades too early. They take their money off the table because they see a reversal coming and they have no understanding of being able to interpret whether it's a primary to primary or primary just to secondary, and it's going to revert back into the primary in their original direction, in other words. So that's what we're seeing on the CSI at the moment. In terms of currency pairs you wouldn't bother looking at it right now, they're pretty obvious. You wouldn't be looking at the dollar yen. Why? Because they're trading in the same direction. So there's going to be no trade there. It's just in congestion. Same with the Swiss franc. If you were looking at dollar Swiss or Swiss yen, there's no trade there. Trading in the same direction. You know, you look down at the bottom here. You've got the Aussie, the New Zealand, the euro, the pound. They are all pretty much going in the same direction. So it's a question of teasing this information out the whole time. Let's go back onto the charts, see what's going on. Let's go back onto the majors matrix again. There we go, that's what we're seeing. Let's pull up cable again. We had the snap move low, nice, lots of volume, it's great. You know what we expect to see. What are we seeing now? Volatility, so we're expecting some congestion. Ton of volume coming in under this candle. And you know, that's anomalous. Why is it anomalous? Because when you look at, and remember, we can't move over here to compare volume because this is Far Eastern Asia. Come into Europe here at 7 o'clock. European, we can compare volume across the European session up to 8 o'clock. Now we're looking at 8 o'clock onwards. This is where we're comparing volume. So, you know, in terms of comparing volume, we don't really have a comparative candle for that. All you can say at this point is that, you know, you look at something like this with this amount of volume, and now we've got twice the volume, if not more, and it really hasn't gone very far. So this is hardly looking very strong at the moment. Trend monitor is still red, and obviously you'd have this on different time frames. So let me hop over onto, and you can see also when you look at the other pairs, you know, what are they doing? How are they reacting to that? Euro dollar's carrying on down, and this is another aspect too. This is slightly more nuanced, where you will see the selling of particular currencies rotate. If you're in a matrix of dollar as we are here, what you will often see is that the move in one will come to a pause point. And the part of the reason for that is when you look at the CSI here, you will then start to see that particular shift into another pair. And part of the reason for seeing that shift into euro dollar is that the euro is now moving sharply lower, whereas the pound itself is actually down into oversold. So from an oversold, overbought perspective, the pound looks as though, you know, it may be coming to a pause point, whereas the euro has still got a little way to go. The dollar is very strongly overbought, but then it was overbought back here somewhere and it carried on high. Yes, it flipped lower, but it's carrying on up again. So you will see this rotation from pairs throughout the matrix, where the selling in one pair will soften, and then it will be picked up by another one. So it's another reason for having this matrix up all the time. let's just go back to the, let's go to the, I'm not sure what I've got on here. Let's have a look. Okay, we've got cable here, good. Okay, so we've now got 15 second, 1 minute, 3 minute, 5 minute, 10 minute, and over onto the daily. I like using the 15-second chart. It may not suit you, but you know, it's one I like to use because it's, you know, it's really delivering. We've got lots of volatility. We've got volatility triggers all over the place. We've got another one coming here on 1 minute. So, you know, we've got to be cautious. And this is the reason for using multiple timeframes, because if you get one of these, for example, we've got it here on 1, nothing on 3 at the moment, nothing on 5. We've got a whole bunch of them on the 15-second. But it will give you a different perspective on the question that you will always ask yourself is, why has that happened? Why has the market paused? Has it paused because we've got volatility in a different time frame? You can see here lots of volume. Market makers are always involved with volatility. If you get high volume, they are definitely participating. If you get very low volume on one of these, it means they are trapping. It's a trap move. It's a trick move. Simple as that. They are participating in here for sure. You can tell so by the volume. Trend monitor's red throughout, so it's really helping to keep you in this particular position. It just gives you that confidence to stay in. You're starting to see a bit of reversal here because you had volatility. We expect to see something going on, not either congestion or reversal, purely because we've got it here. So the fact you're seeing nothing reflected over here, but you're seeing a pullback, the reason you're seeing a pullback on 3 is because you've got volatility on 1, and you've certainly got volatility over on the 15-second time frame here. So go down onto a slightly slower time frame. You see the high volume there. You know, it was weak. Now we've got this potentially, we want to see the volume coming in here, because this wick is developing something quite dramatic. If it holds, we're on a 5-minute time frame. Where are we? 47. So we've got another couple of minutes to run. We'll see what happens. And of course, what will dictate the potential, if this is a potential pause point, if we do end up with this nice big wick to the lower body, much will depend on how much volume we then get on here. The reason I've got this closed off is because I've got so much volume coming in, so many charts open, so much going on. This will close off at the end of the session. If you want to put it on live, then all you do is go into the instrument. Click it on there. Where are we? Volume up, down. There we go. I've got it on bar close. You can see it here. Just put it on tick. There we go. Apply. Okay. Now you can see the volume coming in real time. Excuse me for a moment. Now you can see the volume building. Get rid of that for a moment. So it looks like we certainly got the highest volume of the London session starting at 8 o'clock here. We've got the highest volume coming in on the 5-minute time frame already. We know we've got a couple more minutes to run. So this is going to be a serious amount of volume with potentially a serious wick to the lower body. But you know, you have to wait and be patient and see how that particular candle closes off. Let's see what's going on elsewhere. Okay, on the 3-minute, you can see here we've got more volatility, we've got high volume, we've got some decent strong buying coming in under this candle because we've got the wick here now has formed, and we've got 1.5 tons of volume coming in. So there is certainly buying coming in at this level for sure. And it's not a great surprise given that the pound is now heavily oversold down on the 5-minute CSI. And as I'm sure many of you know, I would now be eyeing up the opportunity to potentially get into reversal trade, get in early. That comes at a price, because the price is I would have to set a much wider stop loss to allow for the buffering, the inevitable buffering that will go on down at this level. But my payoff is that I will get in early. So if cable does develop into a reversal, I'm in early. I've paid a bigger ticket price to get into that particular scenario. It's a bit like going to, well, anything you can think of, a concert, whatever it may be. If you want the best seats, you've got to pay top dollar. Well, I want the best seat on the trade, so I'm going to pay top dollar. In other words, I'm going to put in a much bigger stop loss. I'm going to put more risk on the table, but my reward is I get in early. If you're going to wait, if you're going to wait for this to roll over here, for example, on the yen or the dollar, you can see the New Zealand's already shooting up. That's come off the oversold. Be a really nice trade developing on that one. Real strength in that. You can see The inclination of the line is almost vertical, so it's incredibly strong buying in the New Zealand yen for whatever reason. If you set that up against any of these, then that's going to deliver a really nice trade. But if you're setting up for cable on a reversal, you're going to get in early, put a bigger stop loss on, and the reward is that you get into that particular trend and you maximize what that trend may be. Now, if you're going to wait for this to reverse here, for example, if you're going to wait for New Zealand to come down to the yen where it crosses, where the trend will be very well established, the quid pro quo is you put a smaller stop loss on. In other words, your risk is much, much smaller than mine was, but then your return is much smaller because your potential is only from there to there. And in addition to that, you've already lost this lot. So it's a balance you have to play. You have to find what suits your trading mentality. It's why in the Forex program, we always urge you to start with the psychology module, because if you understand yourself, and it's a huge module, there are 8 PDF downloads, I think, from memory. It's a big module because it's so important, because if you understand yourself and understand your strengths, but also recognize your weaknesses, then you will be able to tailor your approach to give you the best chance of successfully trading these markets. If you're battling with your weaknesses all the time and you're trying to force yourself to do something you're not comfortable with, then you will struggle. So it's a question of matching your personality, your strengths, your weaknesses to whatever is going to deliver the best possible opportunities for you that you're comfortable taking. If you're not comfortable on a 15-second chart, don't bother with it. It's going to cause you grief. If you can't deal with it, the speed of a 15-second chart, don't go there. If you find 1 minute too fast, don't go there. Move to slower time frames. There is no right or wrong way to trade any market. You have to find what suits you. There are a myriad ways of trading. You've got to find what you're comfortable with and what works for you. You can start to see this little bit of buying coming in. It's no great surprise. We've seen it here. The 5 minutes now closed off. How did it close off? Pretty much the 3 minute, nice wick to lower body, lots of volume underneath. So we know we've got buying coming into the market and a potential for a trade to the upside now, and possibly a longer term trade to the upside. You can see here on the trend monitor, it's already transitioned on 15-second, what you expect to see. It's gone back up to the volume point of control because everything is the same, whether you're on a 15-second chart or a 15-minute chart or a daily chart, it's all the same. Why has the market hit some resistance? Because it's at the volume point of control, number one. Number two, we've actually got some price-based resistance overhead here in these little levels. This is on the accumulation distribution indicator. You've got more here. You've got some support underneath, but primarily we've hit congestion because we've got to the volume point of control. The heaviest area of volume sits up here. So it's why the market's paused. We've got volatility. We've got lots of volume there. It's what we expect to see. Moved inside. Looks as though we're going to try and break away from the volume point of control. We've got some resistance overhead here. If it gets up to that level, 2740, then the journey from 40 to 44 should be relatively straightforward because the volume here is falling away quite dramatically into nothing at that particular level. Then you go over onto the 1 minute. How much travel have we got on the 1 minute? Well, from a trading perspective, we've got some nice low volume, a nice low volume region in here. We haven't got any price resistance to come into play. So in terms of moving through there, pretty much on the, as we saw on the 15-second, 45 up to this nice level up at 60. So we've got a much wider path here of 15 pips before we start to hit volume again at this level. So in terms of travel of that opportunity, this is going to yield a decent return, and it's moving up pretty rapidly. Chances are we'll get a volatility trigger in a moment. But in terms of the opportunity, you can see the volume point of control, it moves around the whole time. Now we've got volatility on the 15-second. Back inside, we're moving up. Okay, and this is what I mean. I've got in early here. I've paid a price. I paid a big ticket price to get in. I'm quite happy to do that. And now, I'm already, 30 pips up? And you're looking at this going, blimey, I wish I got in earlier. Why did I miss that move? Well, you missed the move because you didn't want to get in down at this point because you didn't want to put the risk on the table. I've decided to put the risk on the table, so I'm benefiting. I'm up 30 pips now. This is now reaching the volume point of control. We've got a volatility trigger. At this point, I'll be taking the money off the table saying, thank you very much. You know, I'll take my 30 pips and bag that one, bag and tag it. And I'm just going to wait for this to clear, see what's going on. We've got volatility up here on 1, nothing on 3 at the moment. But, you know, if I'm on the 5 minute, that's what I'm waiting for. There we are. So I've now closed out, taken my money off the table, quite happy with that. I'm going to wait for this to break. What am I going to wait for? Well, certainly a move up, probably up to about 70, because through 70, we've got low volume again. So, you know, there's maybe another 10 pips there, maybe 12, 13, 14 pips for bagging there, possibly. You can see the trend monitor hasn't even transitioned yet. That's fine. If it's going to transition into a longer term trend, then it will for sure, but it's not at the moment. It's too early days. We've only got 2 candles here. And the strength of that move is being driven both by pound buying, but also by dollar selling. And that's what you're looking for the whole time. You are looking for that combination of buying and selling in the pair to deliver that momentum that you're going to be seeing. Now look at the New Zealand. That's still climbing nicely. That trend will be developing nicely. I would have got in down here because I'm looking for oversold, overbought all the time. You might be looking at this now as a crossing opportunity, trend underway, no problem at all. Same with the Swiss franc. You know, you're spoiled for choice at the moment, but that's you know, that's already delivered a chunk of profit. You've lost that. You can't claw that back, and that's the balance you're going to have to play the whole time. All the time, you're looking for those opportunities, and you have to decide: am I going to trade reversals, or am I going to trend trade? Am I going to trade breakaways? Am I comfortable trading congestion? Do I have the patience to sit through congestion? It's like looking at the dollar right now, going right back to where Anna started with the dollar. Can't remember what time frame it was on, but if you're looking at that, it's patience, 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 patience. Because when that breaks away, that dollar, you know, that will be a strong trend on the dollar. A lot of it will be defined obviously by politics, but it will be a strong trend. And it's exactly the same whether you're looking at a 15-second chart for a trend, congestion, whether you're looking at a 3-minute, 5-minute, whatever. It's all one and the same. Here we are. You know, am I happy I've taken my profit off the table? Yeah, absolutely. Why? Well, because, you know, it's going to congest or possibly reverse even. So I'm in and out. Thank you very much. I'm just going to, you know, maybe move on somewhere else, maybe keep an eye on that, see what's happening. This may continue all the way up to the top, or it may just flop over again. You know, it could be a short-term move. It's being driven by the dollar strength, which is helpful. You know, I might move over and look at something else now. It's a constant process. I can hear Anna clacking in the background. Sorry, I have my chat box closed the whole time. Okay, are you okay with the questions, darling?
Yeah, I'm finished, that's it.
Okay, that's it. We have run over time. Apologies for the late start. I hope you've enjoyed the session. Let's just wrap up by going over to the various sites. Where you'll find everything. This is the Forex trading program that I mentioned a couple of times. You'll find it at Quantum Trading Education. It is called the Complete Forex Trading Program for the simple reason of that's what it is. These are the core modules. This is the psychology module I mentioned earlier on. It is a huge module. It's the one we recommend you start with. Then you're into the fundamental modules, fundamental analysis. It's a complete walkthrough of all the fundamentals, how they respond to the market, what they're likely to do. Then you've got the relational analysis. It talks about all the related markets. Technical analysis module is a deep dive into VPA, as you would expect. And then we've got the mechanics of trading. There's over 200 hours of video in here. You've got VPA chart examples, how to use the indicators, of course, pulling it all together, topic webinars, webinar library and resources section as well. And it's all backed up by the VPA chat room, which Anna and I host every day. We're always there, and it's our students are there also, so you're more than welcome to come along to that. This is Anna's site, annacooling.com. You'll find all the books up there. They're in Kindle and in paperback, the top level there, and links to all the other sites as well. Over onto quantumtrading.com, which is where you'll find all the indicators, MT45, NinjaTrader 7.8, and TradingView. Yes, TradeStation is coming. I know I seem to have been saying that for a long time. It's been a massive, massive amount of work, I can assure you. We weren't quite expecting the amount of work, but it's 2 platforms in one. It's not TradeStation Global, which is 9.5, which is TradeStation with interactive brokers. So if you have an IB account or you're thinking of an IB account, it's a great way to trade because you can trade through TradeStation using a deep discount brokerage, which is IB, which is what we've got set up. It's very powerful. Then you've got TradeStation Securities, which is TS10 version and above, with radar screen and all the other goodies as well. It's immensely powerful platform. It's fantastic stuff, so we love it. And we'll be doing a separate webinar on that. We won't be combining it with these two. We'll be bolting on another webinar as well. Once we've launched TradeStation, we're going to drop back onto TradingView, and we're going to port over the indicators that are missing there at the moment, purely because we didn't have the functionality in the Pine script at the time. We do now, thank goodness. We have object drawing and line drawing, so we can port over all the other indicators. If you have the full package, you as a customer will get all of those free of charge. It's just our way of saying thank you for investing when it wasn't complete. So it's not a bad time to buy it, actually, because I can assure you, as soon as they're launched, the price will be going up the same as MT45, so the full package will be 894. So that's it. There we are. We're done. Hope you've enjoyed today, and enjoy the rest of the trading session. Always nice and lively. So thank you for coming along today. Hope you've enjoyed it. We will be back this afternoon at 3:15 for the US session. More on the dollar, no doubt. So thank you very much once again for coming along. See you soon, and bye, and stay safe, and bye for now.